Jade, so what are your insights on commercial property at the moment? We got a question similar to this last time. So I guess the way I see commercial property at the moment, particularly because, the uptake on online businesses, you're seeing less people work from home. Less people work from the office, though they are trying to push them back to the offices, making that commercial market really, really competitive. And I guess we've kind of been out of it for a period of time now and the main reason for that is you typically won't see as strong as capital growth in commercial as you can in the residential setting. And the other problem is that typically speaking, your tenants are in fixed lease periods. So they will be tied to a lease, which will typically be going up at 3 to 5% per annum. If you've gone through periods of the last few years in residential where you've seen rents increasing at 10, 20% for the last few years, you're able to pass on that rental increase straight away. So what it's kind of seen that lack of I guess demand in commercial through other aspects has seen the rental yields compress. And for me, if I was to buy a commercial property, it would be the very end of my investing cycle. It would be once I'm ready to just purely focus on cash flow. And again, I would still assess the market and the property that I'm going to buy. And I wouldn't be buying, there'd be certain properties that I won't buy. And I'm going to just show an example of an actual purchase that was shared by a larger commercial buyer's agent. I've deliberately removed their name because I actually very much respect them and what they do. But it's just more highlighting if these are the types of assets that they're sharing as wins at the moment, these are not the assets that I would get to. So we've got a standalone, just roll up door shed, could be used by multiple clients, but this is not an asset that I would buy. And the reason I wouldn't buy it, if I was to buy a commercial asset, it wouldn't be something where they're just selling stuff on Amazon or they're operating a gym. Firstly, those gyms or online sellers, like they can just get burnt out, close the shop overnight, and removing all this equipment out of here is just going to be a few hours of their weekend gone. They're not really tethered to that site. If I was to buy something, I'd be wanting to buy something where there's a really well fitted out, whether it's machinery, where there's other types of equipment, where that tenant is tethered to that site, where if they were going to move from one site to the next, it was going to cost them hundreds of thousands of dollars to do such a move. And even if we look at this one here, so it's we go Moreton Bay, $750,000 purchase price. It's bringing in $45,000 in rent. Now, 6% net yield. If we actually run through some numbers on that, so that property, $750,000, they would have taken out at least an 80% loan, potentially 70%. So $600,000. They're going to be getting hit with best case scenario 6.5% interest rate, more likely to be a 6.9. So that means $39,000 in terms of interest that you need to pay. You got $45,000 of income coming through. So you make $6,000 positive cash flow. So $6,000 positive cash flow divided by 52, you've made $115 per week. If your tax rate's at 37%, where a lot of people on here probably are, it might be the other way around, you're essentially walked away with an extra $70 in your pocket. For me, I wouldn't expose myself to a risky asset like that, particularly if I know it's also going to be getting me inferior capital growth as well. So thanks for that question, Jade. Again, I'm not anti-commercial property, but I just don't see the value in it at the moment unless somebody has built up quite a significant amount of capital, and they're probably looking to maybe even make a cash purchase where maybe they want a $2, $3, $4 million commercial property which has a really quality tenant or multiple quality tenants in it, and they just want to have that as an income stream. But again, it's about it matching with what you want to do.